All right, yes. So in the previous video, we went over the filtering process, and the filtering process creates that foundation for a filtering process trading plan. So that allows us to focus on multiple pairs, multiple instruments to find the highest probability one, to eventually look to trade one pair, one instrument, of course. Now, let's say we don't want to do that and we're not comfortable with that. That's perfectly fine. That is, of course, a personal preference where we would now look to incorporate the flow trading plan. So the flow trading plan is what we're going to go over today and the foundation of it. So if you want to trade the flow trading plan, then this is the foundation for that exact thing. Now, the flow trading plan requires the following things to know first before we actually dive into it, because this sets your mindset right, and also a few important things to know before you pick a flow trading plan. Now, the flow trading plan requires for you to pick a volatile instrument. We need a volatile instrument. A volatile instrument is an instrument that is part of the majors, ideally. So right here, what we're seeing on the right side of our screen, we have the indices at the top. All of the indices right there are perfectly fine to pick one to trade right there. DAX, YM, NASDAQ, ES, doesn't matter. They are perfectly fine to trade. So choose one and you can trade them if you would like to. But let's say you want to focus on Forex a little bit more. Then I would advise to stick to Australian dollar, US dollar, EU, or GU. So the top three that we have right there, because they are simply the most volatile, the nicest to trade in general as well. So they are what you want to stick to as well if you want to trade Forex. If you have a time zone that is more so an Asia time zone, etc., where you can't really trade London, then Australian dollar, US dollar might be very nice to trade, of course. So because you then have that Asia major, where you also have that volatility in Asia, which could be quite nice. Now, for the metals, we have silver and gold. Also perfectly fine to trade. Both, pick one and you can trade it. The others right there is where I would only advise to fully dive into a flow trading plan with crude oil. So if you want to trade crude oil, you can do that with a flow trading plan for sure. Bitcoin and Nifty is not something I would advise to use a flow trading plan on in general. Then, for the reason why we actually need a volatile instrument is because in general speaking, so as a general rule of thumb, the more volatile a pair is, the more high probability conditions it's going to have. Because that volatility is simply a trend in the market, right? Volatility is the market either moving up or down. So if that is the case, then we can be a part of that move, most likely. And that is where the volatility comes in very handy. Because let's say we don't have a volatile pair and we are trading a volatile, or we are trading a pair that's simply not super volatile, then again, we are likely to experience more low probability conditions. In a flow trading plan, it is important to realize we want to pick the instrument or the pair. Of course, will we pick the exact right pair? Probably not, because we don't know. But we want to pick the pair, ideally, that has the most high probability conditions over a time period of a year, you could argue. Where in a year, that pair has the most high probability conditions, so it moves the most. It isn't stuck in consolidations all the time. It isn't stuck in those seek and destroy conditions. So if we truly want to be picky with our flow trading plan, and what my advice would be for you, if you want to pick the most volatile instrument, I would look at the indices, where you would look at ES, NASDAQ, YM, and DAX. Now, for me, I traded DAX for a very long time, where the reason I traded DAX was because the London session was really volatile on DAX. So I really enjoyed that, where after 3 a.m. on DAX, you have the same as equities open, where it just shoots higher, shoots lower, whatever it wants to do. It's very nice to trade because you have a lot of volatility coming into the market. And then for my London session, I was done. After that, I could just go about my day, go do something else. Where if I wanted to focus more on New York, I would go with ES, NASDAQ, and YM, for example. So if you truly want to trade a flow trading plan, then my advice would personally be to focus on the indices. That would be my advice. Now, I did not mention the crosses right there. Why not? Because the crosses are simply not volatile enough to focus on in a flow trading plan. They're not reliable enough to focus on a full year, on a full trading year, to focus on it on a full trading year, where you might have months where we just simply don't move on certain cross pairs, where the price action is just ugly. Now, in a filtering process trading plan, we can very easily skip it, as in we can just move on to the next pair. Flow trading plan, you're not able to do that. Now, why are you not able to do that? That is because the flow trading plan, I truly want you to understand this. It's very important to understand that with a flow trading plan, you want to focus for a really long period of time. I would ideally say probably a year, a minimum, where you only focus on one instrument only. So for example, if we want to trade ES, then we need to stick to ES for a minimum 6 months, ideally minimum a year. So give it time. Why is that important? Because that will allow you to actually master that instrument. And when you master that instrument, you will have that experience, you will have that intuition. Where if you master YM, for example, I personally have not mastered YM before. I have mastered ES, NASDAQ, and DAX. That is the instruments that I have mostly mastered for a flow trading plan, because I have traded the flow trading plan before on those indices right there for a very long period of time with just focusing on one instrument. That allows you to then master that instrument, which is very, very beneficial. So that is the very important thing, that the first point, again, pick a volatile instrument, then stick to that instrument. And the volatile instrument is exactly the instrument we went over right there. Now, the next thing in the flow trading plan, the next bullet point, is that we need to pay attention to detail. So attention to detail is understanding the concepts in general. And the reason I say this is because the flow trading plan requires more of your focus, where the filtering process trading plan, like we mentioned as well in the previous video, the filtering process trading plan requires more upfront work. So you actually have time, etc., to see what does it want to do here. Where the flow trading plan, it's a little bit quicker. It's a little bit more action. It's a little bit quicker. You need to pay attention to those details immediately. Are you able to react immediately? So if you need a lot of time to analyze, well, what are we doing right now? Let's see what we want to do. Then I would advise stick to a filtering process trading plan first. Then after you can go over the flow trading plan once you master those concepts. But the flow trading plan definitely requires a little bit more expertise, a little bit more attention to detail. So at first, it might be a little bit more difficult as well, depending, of course, on what you prefer. Not saying one is better than the other, because a flow trading plan can be very, very nice. And I love trading a flow trading plan as well. I love trading a filtering process trading plan right now because it suits me more in my current situation. So again, there's not one better than the other. So second point was attention to detail, understanding the concept. What that actually means is, of course, what we're going to go over as well. Now, then the third bullet point is that the habit of switching timeframes. So we need to create, and this again leads me back to the attention to detail. We need to create a habit for a flow trading plan. And the habit is switching timeframes, constantly seeing what are we doing with the timeframes, where are we creating fair value gaps. So it requires a lot more attention. You can't be slacking when you trade a flow trading plan. You can't simply lay back, watch a YouTube video right now. Oh, let me do a little bit of this. No, you need to pay attention. You need to pay attention if you want to trade a flow trading plan. So it's constantly monitoring as well. Of course, with the use of alerts as well, but your mind needs to be ready at all times. That's very important. Then, to add on to that third bullet point as well, 1 minute and the 5 minute is only for entries. So, of course, the foundational levels we see in the top right is bias, narrative, boundary, target, entry pattern, and risk management, where the boundary is ideally the PD rate that we want to trade off of. The 1 minute and 5 minute can't act as the third foundational level, can't act as that boundary, can only act as an entry pattern. So can only act as an actual entry pattern time frame. So if we want to enter after 5 minutes, that's perfectly fine. But it would not be a boundary to then go into the 1 minute time frame. No, it's just an entry on the 5 minute time frame. That's very important. Then the last and the fourth one right there is it requires a lot more reacting than planning. And if you've been watching the forecast, if this is not your first enrollment, then you have probably noticed the forecasts is mainly focused on actually seeing what the filtering process is doing. So actually having a look over my shoulder, what am I actually doing with my filtering process? Well, if I wanted to create a forecast for the flow training plan, which could be the case, and which I have tried as well in the past, so don't get me wrong, I do think that is futile. I do not think that benefits you. And the reason for that is because if I go to bed, the same as I would do for my filtering process, and I analyze the market, I do my forecast, I go to bed, I wake up. By the time I now look at the chart for a filtering process trading plan, nothing really has changed. As in, it's the same price action. For a flow trading plan, it's a whole new world. It's a whole new chart. It's a whole new price action. Where that is very important. Because again, that also is what we mentioned. That it requires, the filtering process requires more upfront work. Where the flow trading plan is required more work during your actual trading. So that switches around. That's very important because a forecast is not going to be as beneficial for a flow trading plan. That's very important to understand because the market simply has a lot of time to then do the complete opposite of what we expected. Very important to understand as well. So how do we then actually go about this flow trading plan? Now, let's say we want to trade ES. ES is extremely volatile. I love ES. So how do we go about trading this? All right. First of all, you don't need anything else on your list. So to prevent yourself actually from looking at other pairs, from looking at other instruments, let's delete everything right there and only stick to ES. It's very important that you stick to one instrument and one pair. And from my experience as well, is do not go after a bad trading day on ES. After a trading day where ES, you just didn't get an entry, you didn't manage to get an entry. Don't go scrolling through NASDAQ or YM. Because that can only be detrimental where you think, but NASDAQ now delivered the entry. But YM now delivered the entry right there. And ES didn't. That's picking your poison. And that's the definition of picking your poison. Where one day ES will deliver, the other day NASDAQ will deliver, the other day YM will deliver. It is what it is. If you want to be a part of that, then you need to trade a filtering process trading plan and not a flow trading plan. So that would be my advice as well, that please do not do that, because from my experience, I was just stuck in that endless cycle where I thought, but this day NASDAQ is delivering. And I just keep switching pairs. And essentially what I'm doing is I'm delaying the learning curve right there. Because if I stick to one pair, I will excel my learning curve and will reach that mastery a lot faster because I will just experience a lot more things on ES right there. It's very important to understand. So ES, an extremely volatile instrument, which we can look to trade. Now, what do? Do we go into the 1 minute time frame immediately for a flow trading plan? No, we go and start on the monthly time frame. And on the monthly time frame, what you want to do is the same as your top-down analysis as we went over in the analyst phase. You want to mark the closest PD raise. The closest PD ray, the first premium array that we have right there on the monthly is that swing high. Then after, we also have this discount rate in the form of these highs right there. All right, now, then we go into the weekly and we do the exact same thing. Ideally, you want these higher time for PD rays to be fair value gaps. If there is no fair value gap right there, perfectly fine. Then don't force it, of course. But ideally, you want it to be fair value gaps. Now, this is also where you are allowed to look at the left for your fair value gaps to see how we reject off of that. So what does that look like? Well, here on the weekly, I would argue we have the same exact PD ray. So nothing really changes. We don't have a fair value gap just yet on the weekly. Once that is being created, we can look to mark it out. So next week, that could be a discount array that we can trade into potentially. So right now, nothing really changed. So we can go into the daily time frame. What is happening on the daily? Well, on the daily, we do have this daily fair value gap right there. It's a little bit higher than the monthly high that we had right there. So we can mark it out. Perfect. So what we're constantly doing, and if you notice, I'm marking out the closest PD rays constantly. So if the daily is a little bit higher than the monthly high right there, it's perfectly fine to now even remove the monthly right there potentially to just look at the daily right there. I'll just, for the ease of it, I'll keep both of them. Now, what did we also mention? We can now also look to the left for our fair value gaps to potentially see if we have a target right here on the higher time frame. we did have this high right there. Let's see if that high is of any significance. Well, right there, but I would then say, all right, the monthly right there is quite nice because the monthly is of course on the higher time frame, but overall we can see how we potentially want to reject above this swing high right there. Ideally, when you do look to the left, you want it to be fair value gaps. When you have fair value gaps that are not traded back into. So for example, here, there are no fair value gaps that we can trade back into because they have already been traded back into. So then you would refer to the swing highs. So that is why you can pick the swing high right there instead of looking for fair value gaps, because there are no fair value gaps here to trade back into that haven't already been traded back into. So the swing highs right there are perfectly fine to actually use. Now, we have that daily right there, the daily swing high. In the 4 hour is where I would draw the limit, as in where I would not necessarily want to mark out every single PD rate to see what we want to do to the left as well. It's a little bit too much. But on the 4 hour, we can again go over close price action to see what are we actually doing on the 4 hour right here. Now, on the 4 hour overall, we see that if we take it a bit back, this is where now the direction starts. Why did we mark out those higher time frame PD rates right there? We have this one, we have the daily fair value gap, and we also have this high right there. Because very simply said, we are now looking at which higher time frame PD rate do we want to trade to first. And this is where the 4 hour and below comes into play. Where the 4 hour and below is where we can now look, all right, where are the 4 hour time frame and below, where are those time frames guiding us to? So are the fair value gaps pointing higher, pointing lower? What is the overall market telling us right there where we actually want to trade to first? Because if we compare this to a filtering process trading plan, then a filtering process trading plan, you would have this daily fair value gap right there, like we went over yesterday. And we would say, all right, perfect. So we can potentially look to trade towards it on the 4 hour. But other than that, I would ideally want to wait to continue higher off of that. Where a flow trading plan, you would not do that. Because a flow trading plan, you also understand right now that you can look to already trade higher off the 4 hour, off the 1 hour, depending on what the current price action is telling us. Where in a filtering process trading plan, that would be a little bit lower probability. Reason being for that is because in a filtering process trading plan, you can find another pair, you can find another instrument that is having those exact requirements, most likely. So we would not want to force an ID to trade back into the daily value gap. We would rather wait to trade higher off the daily value gap because that's the highest probability overall. But on a flow trading plan, we can now look to go into the lower time frame, into the 4 hour again to see, well, what are we actually doing? We have this 4 hour value gap sitting right there. We could potentially be sweeping those highs. In order for us to sweep those highs, what would that look like? Well, that would look like the following, where we have a 1 hour value gap potentially going lower right there. All right, we have the 1 hour value gap going lower. Do we take a trade right there? No. Why not? The flow trading plan is extremely important to acknowledge time. Where the flow trading plan on the indices, you would use, again, what we went over on the higher time frame time and the lower time frame time. Where the indices, you want to wait for that equities open. Where DAX, for example, you want to trade London. So if you want to trade the indices, but you don't want to trade London because you're in Europe or whatever, then you can look to trade DAX potentially, which I've traded for a very long time because the 3 a.m. open on DAX is very strong. There's a lot of volatility coming into the market, which we'll also take a look at after this. So right here at this moment, you would want to wait for equities open. So currently we don't have anything to deal with. We don't have anything to deal with. Then afterwards, right there is the 9 a.m. candle right there. And that is where it gets interesting. So at that 9 a.m. candle, we just simply want to see, we open our chart. And this is why making a forecast on this is a little bit more difficult. Yes, you can do that, of course, on the higher time frame, see what it wants to do. But the 1 hour, by the time we look at the chart again, has changed so much. So right here on the 1 hour, we now want to see, all right, well, we are clearly not sweeping this high. So if we are not sweeping that high, then what does that mean? Well, that means if we're not sweeping that high, that might mean that we actually want to continue higher towards the next PD rate that we have right there. So that means that the 1 hour and the 4 hour is now guiding us to the higher time frame PD rate that is sitting in form of that swing high that we had right there. So this is what you want to be doing. You want to use the daily, weekly, and monthly as the higher time frame PD rates. The first step, mark out the closest higher time frame PD rates. Ideally for value gaps. We don't have for value gaps, then swing highs, because we're either rebalancing or we are doing what? Or we are taking liquidity. So we're either targeting fair value gaps or swing highs. That's very important. Then the next thing is, all right, we are now going to be using all the time frames to see where we want to trade towards. So the time frames is our guide. The 4 hour, the 1 hour, and the 15 minutes, those are our guides to see what we actually want to do. Do we want to trade first to the discount array in the form of that daily value gap, or do we already want to trade higher towards that premium array sitting right there? Then, next thing we want to do is we want to wait for time. So we want to wait for our kill zone, ideally. And then our kill zone for equities open is sitting right there on the next candle, 9:30, of course, equities open, it opens up. So what do we see here? Well, if we want to continue higher, then what can equities open if it wants to retrace? Reach for before we continue higher. Well, what is the flood and the lot? We have this fair value gap, and very easily said, we have this low. Is there anything on the 4 hour that we can reach for below that still? No, because we have already reached the 4 hour fair value gap right there. So we can continue higher off of that as well right now currently. So equities open will likely do what? Well, equities open is not going to be responsible for a push all the way down right there to then continue higher in the same day. No, equities open right here wants to make a fast retracement into any discount rate that's sitting right there to then continue higher. So right here, very easily said, it just becomes usual context that you also have on your filtering process trading plan. The only thing is the way you get to a bias, the way you get to a draw liquidity, the way you get to a narrative, the way you get to that boundary requires a little bit more work than just simply seeing the 4 hour daily and seeing, all right, daily value gap might continue higher off of that. No, requires more, what we talked about, more attention to detail. Where if, and again, that's nothing wrong, right? But if you don't have that attention to detail, then a flow trading plan might not be something for you. And that's perfectly fine. That's perfectly fine. Then you can just look to trade potentially the filtering process trading plan, where it requires still that attention to detail, but a little bit less and a little bit less focus, and you can take more so your time to actually get to the draw liquidity, etc. Where here, if we see this, we don't have a lot of time to now wait for, all right, what do we actually want to do right there? No, we need to be a fast twitch brain right there. We need to have a fast twitch brain where we think, all right, the 1 hour value gap right there, if we were sweeping that high, then we should have already respected the 1 hour value gap to continue lower. We should have respected the ST. We're now in the fair value gap area, or that fair value area right there, which we are respecting, so we're continuing higher. All those things need to come to you very naturally, very fast, in order for you to be trading a flow trading plan right there. Which again, I do not think you have the capacity to do that immediately. As in, I am not saying that if you do not have that capacity right now, you should never be trading a flow trading plan. Don't get me wrong. But if you are struggling with that, then first maybe take your time stepping into a flow trading plan. Try to practice a few things. You can do it. If you are determined that you want to trade one instrument, then I would just advise, start tape reading. So start seeing what happens every day. Not even executing just yet. Just seeing what is happening this day. Where do I think we can continue higher from? What do I think is going to happen here? Just simply reading the chart. That's it. And then eventually you can look to take actually orders. So that also is how you can practice it. Now, if we want to continue higher, 1 hour value gap right there, which we can continue higher from, that creates the overall, what? Very simply said, the context. The very simple, usual context that we have been using. So the first target being that high, and the eventual target is this premium array sitting right there. So on the 1 hour, we have a sting into it. And then right there, after that equity is open, we can just look for our ST and our re-entry. Where would it be right now? Our ST sitting right there, and then we have the re sitting right there. If we enter off the flood, it would have been something like this to then continue higher off of that. Now, how would you eventually go about this? Where I would argue, if we now take that context high, this is still perfectly fine to enter in a flow trading plan. It's, again, a little bit different from a filtering process trading plan, where if we take that context high, all right, you can still look to enter it right there. Where right now, we need to be aware, all right, what are we actually doing? And this is what I mentioned. You need to now have that habit of switching timeframes. What are we doing on the 15-minute? What are we doing on the 5-minute? What are we doing on the 1-minute, etc.? To constantly see and to constantly monitor, do we still have that reason to continue higher? Can we reach for that context a little bit lower? Where, for example, this entry at that moment in time is still perfectly fine. And let me explain why. Right there at that moment in time. And let me see, that is 9:48. So, well, is that perfectly fine? The way I see this, why is that entry perfectly fine? That entry is perfectly fine if we have not created a 15-minute fair value gap below these 1-minute order flow legs right there. If we have, then I'll take back what I said, and the entry is not fine because then we need to cover the 15-minute fair value gap. 9:47 right there on that particular candle. Well, actually, you would have gotten in a little bit earlier. 9:44 right there. Let's see on the 15-minute. On the 15-minute, this candle opened at 9:45. So that candle is still in the making, which means at 10 a.m. right there, then we create that new fair value gap sitting right there, which, if we can see, the 1-minute covers that 15-minute fair value gap as well. So here, this is a perfectly fine entry, where if we do come back into that, only a sting would be enough to continue higher right there. Now, why do we do this? Because if we trade a flow trading plan, I imagine, and correct me if I'm wrong, but I imagine that most of your entries would like to be on the 1-minute and the 5-minute. 15 minutes, yes, you can also do that, but most entries are going to be on the 1-minute and the 5-minute. It's going to be faster pace. It's going to be quite a lot more opportunities than you would have on the filtering process trading plan throughout one single day. So that is important to understand, because again, we don't want to cover this low. Because if I wanted to cover that low, I would have been trading a filtering process trading plan, and I would have not focused on that scalping. I would have not even taken a 1-minute entry. So it's very important right there to focus and to understand and to keep reminding ourselves of our core values. Do we want to be a flow trader? Perfect. We focus on scalping and intraday trading, where we focus on the 1-minute and 5-minute entries ideally. 15-minute, yes, also very nice, perfect. But 1-minute, 5-minute ideally. So if we take 1-minute, 5-minute entries, we don't all of a sudden want to go from a scalper to now a swing trader. That's not our goal. So very important to understand as well. Now, here we can look to target first at 1 to 2, and then eventually, of course, also a little bit higher right there, because we have that daily target in the form of that higher time frame premium, because the price action there is simply telling us that we want to trade first to this premium. Afterwards, we can see, do we want to trade lower into a daily fair value gap right there? Perfect. Yes, we can potentially do that. But the fair value gaps right there are just simply not pointing towards that daily fair value gap right now. So why would we force a trade into that daily fair value gap if the lower time for price action is just simply telling us that we want to continue higher right now? So eventually this trade plays out right there. And how would you add into a new position right now? Well, we have taken 1 hour context. So what can you do? Well, that is where the rule stays the same, right? Where context is taken, what do? You can go down the time frame to go into the 15-minute right there to look for your new context potentially. And then you take a new potential 1-minute entry off of that right there to then continue higher off of that again. So then eventually take profit. And how would you again add onto the position here is by looking at 15-minute, 1 hour PD rays. Are there still any PD rays left that we can retrace back into to then continue higher off of that and to look for our 1-minute or 5-minute entry pattern again? Now, in this 15-minute fair value gap, if we traded back into it right there, that could have been the nice boundary again to then go into our entry pattern right there. So the foundation levels, they stay the exact same. They're the exact same. The only thing you're doing is you're changing the overall time frames. Where in a flow trading plan, you are allowed to now use the 15-minute as a boundary to go into the entry pattern. Where in a filtering process trading plan, I would never do that. Absolutely never. I would never use a 15-minute PDRA as now a boundary to go into the 1-minute time frame to look for an entry pattern. Simply something I would not do. Where a flow trading plan, yes, perfectly fine. Let's do it. So right here, do we have still any premium rate that we can push higher from right there? Well, fair value gap on the 1 hour. We haven't reached the premium rate sitting right there. Is time still agreeing? Yes, time is still agreeing. Let's look at the 1 minute. On the 1 minute, let's see. 1 minute, we had an early ST. That ST failed. After we have, well, do we have a new ST? Not the prettiest price action overall. We have a new ST very high in the leg. Oh, sorry, I missed one. We have an ST sitting right there. After that, we come back into a breaker overall, continue higher of that, create a re. The re sitting right there. You would cover these lows initially, targeting a 1 to 2, targeting these highs right there. And let's see if that actually is in context as well. Yes, on the 5 minute, 15 minute. Yes, could potentially create a fair value gap higher as well. To then continue higher off that. And this is how you would go about that right there. Eventually, we get taken out right there. Perfectly fine. We already made some profits right there. We walk away with 1 hour. Let's say 1 hour right there during the day. Absolutely perfect. This was also a completely valid trade to take. I would have 100%, if I saw that right there, would have 100% been more than happy with that trade right there. So then eventually, let's see what we want to do. Do we still want to continue higher right now? And the same premise stands, right? Where in the beginning, you want to focus on 1 trade a day. Focus on 1 trade a day, whether it's a win, a loss, or a break even. You want to focus on 1 trade a day in the beginning. Try that for a couple of months. I would say 2 months right there. How does that go? How does that make you feel, that 1 trade a day? Eventually, if you have conditions like these, where we have not reached that premium rate right there, but we do have that sting into that 1 hour value gap right there, I would say go for it. Take that trade. Why is that? Because here we are focused on 1 single pair, 1 single instrument. And when that is the case, you are not always guaranteed to have a trading day in the first place. You can't just go into other pairs, into other instruments like we mentioned. So you are sort of blessed. You are blessed when you have that super high probability day. So when you have that high probability day, eventually, if you're used to taking multiple trades a day, you can capitalize. You want to absolutely capitalize on that high probability day right there. Where this, I would argue, all right, if I saw that, I would have definitely taken that second trade as well, because I would see that as a pretty high probability day. So then eventually it runs without us. Perfectly fine. All right, perfectly fine. If we get a 15-minute, something on the 15-minute, for example, a 15-minute fair value gap higher, etc., and we get a new entry opportunity, that could still be nice. Where we have this 15-minute fair value gap right there. Do we have anything on the 1 minute in the form of a 1 minute ST? Well, we had a 1 minute ST very early right there that eventually failed. Then we have a 1 minute ST right there that eventually held. Then the re as well held right there. And eventually we continued higher with the end target being this premium array sitting right there. So that right there is ideally what you want to do. So when you have those high probability conditions, again, you want to capitalize on it. Now, I'll give you a quick tip as well. I have traded ES, NASDAQ for a very long time. And as a general rule of thumb that I always like to use is when price action gets blocky. So if you trade ES, you know probably exactly what I'm talking about, is when price action gets blocky. For example, if we look at this right here, just ahead of equities open, can you see the difference in this price action where it's very static? It's very blocky price action, where right here, it becomes more smooth. It becomes more smooth, like on Forex. On Forex right there, the price action is smooth. Can you see how smooth this is compared to ES right there on the lower time frame? When price action gets blocky, you want to take a step back. So for example, the trade right here, and eventually the whole day, what is also characteristic of December, ending the contract right there also, the volatility dies down a little bit. So when price action gets blocky on futures, just know, especially on indices, take a step back. feel free to take a step back and understand, all right, this is not super volatile right now because we have blocky price action overall. It shows a lack of volatility. Now, this is how you would go about your flow trading plan. Now, to fully drill this into your mind as well, let's go over a few more examples. All right, on DAX right here, the next example, what do we see? Well, first we need to start on the monthly again. Let's delete actually everything that we had. On the monthly time frame, what are we seeing? On the monthly, we have nothing really to the left because we're in all-time highs. When you have all-time highs, that's also a little bit more difficult because you can't really look to target anything, right? You can't really have that new target to the left side of the chart. So the only real discount array that we have is in the form of these highs. Then the premium array, the only premium array I would mark out right now, because that's the same premium array on the weekly and the daily, of course, because if there's nothing higher right there, then that high is still a high I would mark out. Perfect can still act as a premium array. And on the weekly right here, we can see, that's what I meant, it becomes a swing high right there. So that is how you would use that. Now, if we mark out these, then we have this weekly fair value gap sitting right there. So that is the first discount rate, the closest discount rate that we actually have. After that, it's this high right there. So do we want to trade into the highs? Do we want to already continue higher off of this weekly fair value gap right there to then continue towards the previous week high right there? What do we want to do? Well, in a forecast right there for a filtering process, I would right now want to see, all right, can we have that ST on plus re on the 1 hour, etc. Where on a flow trading plan, I'm not done here. I'm not done. So on a flow trading plan right now, I would go into the daily and see what do we have on the daily. On daily, we had this daily fair value gap sitting right there. It's just above the weekly fair value gap. So once we come into that weekly fair value gap, do we have any premium array? Well, I can see one premium array that we had first, because right now we have reached the weekly fair value gap. The premium array and the discount rate that I see is the previous day high and the previous day low right there. So which one can we reach for? Which one does price potentially want to target? Well, we're already inside that weekly value gap and we already seem to be respecting it. All right, let's take that into account and let's remind ourselves of that. Then on the 4 hour, what do we see? On the 4 hour, well, on the 4 hour, we can add to it, as in we have a 4 hour value gap sitting right there. Again, 4 hour is not necessarily something I would use to target. It's more so to tell us that story. So like we mentioned on ES as well, 4 hour and 1 hour is what I consider as pretty similar. Just the 1 hour gives you more detail overall. Where the 4 hour and the 1 hour, you want them to use as a guide. Same as the 50 minute, you want to use that as a guide to see which high time period rate do we actually want to trade towards. So we have that daily, previous day high, and the previous day low sitting right there. So let's dive into the 1 hour to see what we want to do. As a general rule of thumb and another trick as well, if you want to look to trade DAX, I've also traded DAX for a very long time. And if you want to trade it, then get involved after 3 a.m. Before 3 a.m., yes, can sometimes work out. It's easier to wait for 3 a.m. overall and see, because 3 a.m. is where we have a lot of volatility coming in. It acts like equities open for DAX right there. And again, if you want to trade London, but you also want to trade indices, I would advise to trade DAX right there. Then right here, oh, not too fast, not too fast. Ooh, not too fast. Wait a minute. Then, if we want to continue higher, what ideas do we have supporting to potentially continue higher? Well, first of all, we created this fair value gap sitting right there. So we have an ST actually. We have an ST going higher. What do you remember about the time frames cheat sheet and about understanding how you combine the time frames? If you want to enter off of a weekly fair value gap, a weekly PDRA in general, then you would want a 1 hour ST plus re. But you can go into the lower time frame off of just a 1 hour ST, right? So if we just have a 1 hour ST, it's not an entry in a filtering process trading plan. But that is an entry in flow trading plan. Why is that? Because if we now trade back into any discount array that is sitting right here in the form of that ST right there, then what can we do? We can look for now a 1 minute ST plus re inside that 1 hour ST. So that is again that 3 steps what we talked about, where for your normal entry would be weekly PDRA to then go into the 1 hour ST plus re. This is what we touched on in the execution phase. And that would be your normal one. Where we also touched on, you can also look to weekly PDRA and then have a 1 hour ST. And that 1 hour ST acts as a new boundary to have that 1 minute ST plus that re right now. Because the 1 minute ST plus re is the same as a 1 hour re. So us flow traders, we want to make use of that 1 minute ST plus re. Where your filtering process, you would mainly want to wait for your 1 hour ST plus re. So flow traders and us being flow traders right now, all right, well, what is the discount rate that we can continue higher off here? This is where attention to detail again comes in. Can you see that? I hope you can see that very clearly. This is also where the habit of switching timeframes comes in. Hopefully you could also see that in the examples. This is now where requires more reacting than planning comes in as well. And I hope you can see that as well. Because here, if I was a filtering process trader, my first reaction would be, and this is usually what you see me say during forecast, because I mainly go over filtering process trading plan right there. I would say, all right, here I'm going to wait for a new fair value gap. I can already hear myself say it. I can already hear myself saying in a forecast, I'm going to wait for a new fair value gap higher. I'm going to wait for a new fair value gap lower. Where in a flow trading plan, what would you do? No, you don't wait for a fair value gap higher. You already got the ST. What is another discount rate? These lows sitting right there. Do you need to know that we are going to trade into those lows? No, absolutely not. You do not need to know that. Because the same as the example with NASDAQ on NFP, which we talked about in previous videos as well. Here, you would just simply react at that equities open for DAX right there. We sting below it. At first instance, you might think, okay, nothing really interesting just yet. So here, you want to wait for that 3 a.m. again. So if we have, this is the 1 a.m. candle right there. So let's wait the next candle. Next candle is sitting right there. Perfect. Currently, I would argue, well, we might actually be going lower right there. And there's probably not really anything interesting. But if we want to consistently and constantly be navigating those time frames, what do we do here? On the 15-minute, we are likely continuing lower off that 15-minute order flow that we have right there. After that, we have a huge spike higher, not following through on that 15-minute order flow going lower. On the 5-minute, what are we seeing as well? 5-minute right there. All right, potentially continue lower. 5-minute acts as an entry again, not as our PDRA. On the 1 minute, what are we doing? In that moment that we shoot higher right there, what do we see? We see we had a 1 hour discount array in the form of those lows to then go into the 1 minute to see, hey, now we are continuing higher. How can we be a part of this move? Let me see the 5-minute right there. Let me see the 15-minute right there. To target first that 4 hour fair value gap right there. Afterwards, we come back into those 15-minute fair value gaps right there. And we can continue higher potentially off those towards what? The previous day high, which is the actual higher time frame PD rate that we are targeting. And then right there, we eventually, not the nicest price action again. Sorry, that's December for you. But eventually we reach that target sitting right there where we consistently monitor those time frames. What are we doing? 1 hour, we didn't even create a fair value gap higher, which is not that nice price action like I mentioned. 15-minute, create a few fair value gaps higher right there, potentially 1 minute as well. Then eventually we can look to simply target this high sitting right there, the previous day high. So where for the filtering process trading plan, again, to give that full comparison, is we would not be doing this at all. Here I would have seen filtering process trading plan. I would have seen, not a 1 hour fair value gap higher. Going to ignore it, delete it off the interest list. Where flow trading plan, you just caught a couple of moves. You just made profit. Where again, that has its pros and cons, right? Where in the previous video, I went over the filtering process where it's great. The flow trading plan is just as great. It's both great. It's both absolutely awesome. It's just which one do you prefer? Which one has your personal preference? Which one is more convenient to you currently? Now, right there, that is exactly how you would, again, go over that filtering process. With a lot of reacting. Not so much planning. It's a lot of reacting. So you also need to be aware of that, because I can also, I see quite a lot on the internet where people always want to know exactly what is going to happen before actually something happens, which is of course human nature, right? It's human nature to always need that understanding before something actually might happen, right? We don't want to react. It's easier to understand already what is going to happen, which is where a filtering process, I would say, comes in, because you don't necessarily need to react in a filtering process. If you want to trade unusual context, you can do that. You can react. But a filtering process is very much planning. It's very much already thinking ahead. All right, price might want to do this. If it does that, then I want to capitalize on it. Flow trading plan right here is, again, very much reacting. Flow trading plan, like we mentioned, and otherwise I'm going to keep on repeating myself, but it's to fully instill this into your mind. A higher time for PDRAs, you would mark those. 1 hour and the 4 hour is where you want to use the guide. Those are your guides to see where do we actually want to trade towards. 15 minutes as well, of course. Then you want to see, all right, do we have equities open? Do we have time agreeing right there? Ideally equities open. And again, the reason why we use equities open and why I use that as the example is because that makes it a lot easier. Flow trading plan requires, again, that kill zone. It requires more so that kill zone where you have a very specific time window where you have a lot of volatility coming into the market. That is where the flow trading plan is really strong. So then as well, the bullet points we went over in the beginning: volatile instrument, attention to detail, habit of switching time frames, constantly monitoring. What are we doing? Are we creating Verwijken below us, above us? Then requires more reacting than planning. Flow trading plan is not where you would be, all right, we have a monthly Verwijken below the weekly Verwijken, so we are now waiting for that monthly Verwijken right there. No, how can we trade towards it? How can we be part of it? How can we do this? That's all things we need to pay attention in a flow trading plan, which eventually, of course, this is only the foundation, which we are going to dive deeper into as well. And you will also get a full trading plan as well without having those with having the clear guidelines as well. It's mechanical as it can be, that 80-20 rule right there. All right, perfect. Thank you.